Hello traders, welcome to the SMC Trader. Today I'm gonna show you how to trade if you have a daily job and how to manage your positions without even taking a single loss. I will guide you now step by step with this amazing strategy that is gonna take place on higher time frames, which is ideal for you people who have daily jobs. Let's begin with the video. And here I am on GU yet another time. It doesn't matter which pair you're gonna be using. This is the previous example that I showed. What I'm gonna be doing now though, I'm gonna be scaling up to the 4-hour time frame. On my other channel, ChrisFX, I have shown how to do this thing on the 15-minute time frame only, but this video is for you who have a daily job and you are occupied and you cannot be in front of your charts. This is absolutely ideal, and if you follow what I'm gonna tell you step by step, you are guaranteed to succeed in this industry. Here we will be using only the 4-hour time frame. I don't want something extremely large such as the daily, and I don't wanna have something small, let's say, or in between such as the 1 hour. I'm gonna be deleting this area right here, and we will go again randomly somewhere in the past. So I will do that. Okay, we are exactly right here. Let's take that. Or in case you think that I have calculated that in the past, let's do something like that. And let's start from here. And I will hit Alt and R on my keyboard. Okay, as we can see, and as I said also in my other video on the other channel, I am gonna be using fair value gaps. In this occasion, the fair value gap would have been this one right here, and I would be willing, as an example, to enter over here. But now this has played out, so I'm gonna be moving forward and I will look for the next chance, let's say the next opportunity to enter a trade. Here I have another FEG, and again guys, you can easily use order blocks for this strategy. Either you identify them like that or as the lowest candlestick before an up move. It is absolutely fine. I'm gonna be using fair value gaps. So I am moving forward. Here I have another fair value gap, which is kind of being respected. So in this occasion, when I see that, I am gonna be going ahead and I'm gonna add a trade right here, and initially this is not a stop loss, there is no stop loss theoretically, but let's say that this is a risk of full 1%, and this is something that we need in order to calculate how much we're gonna be risking, let's say, lot wise, how many lots, and let's say that you target whatever, as we did in the previous example, 1.5 to 1 reward to risk. If this plays out, everything is fine. If it doesn't, I will show you what we will be doing. There we go, kind of playing out, and we are theoretically out. If you would be having a stop loss, now you would be out of the trade. But as I showed also in the previous video, what we will be doing now, we will have a second order right here. This is absolutely ideal for you who have jobs, because let's say that this is 61 pips, and you are willing to risk, let's say, $60. Okay, so you add 0.1 lots. You open a position with 0.1 lots. Of course, you would have hit the 1-to-1, but let's say that you were going for 1.5 to 1 reward to risk. Now, instead of placing a stop loss, you just know that this risk, if you would have a stop loss, is $60 by using 0.1 lots, or otherwise 1 mini lot. So in this occasion, you are willing to risk 1 mini lot, so $60, let's say, let's do it $60 to be precise. But you don't wanna get stopped out. You place your position right here, and then what you do, you place a sell stop exactly right here. Your take profit, as you can see, is not hit, rather price is coming and is activating you in the other trade. Now, what happens in this occasion, this distance that you have from here until here, okay, this distance is representative of $61. So you have a floating loss of $61. and I'm gonna be making a bunch of videos on this subject because it is an amazing way to manage risk, also for those people who have a daily job, especially for you guys. And what I'm gonna do now, I am gonna leave both positions open and I will check out for the next opportunity to enter a trade. Now I'm gonna be checking out the next fair value gap, and the next fair value gap is this fair value gap exactly right here. What I can do in this occasion, I can do the following. Even though there is not a lot of distance in this occasion to do what I want to do, so I'm not gonna do it. I was supposed to place a short here, but I'm not gonna do that. You will understand why in a little bit. So let's move forward. Yeah, this would have played out. What I'm gonna do, I'm gonna be waiting for price to leave a little bit more, okay? To give us a little bit of distance, let's say. And I will let both of those positions play for the moment. Okay, price is approaching into this fair value gap now. You see there is another fair value gap here, and there is another tiny one, tiny on the 4 hour, which is this one right here. You can, again, do the very same thing with support resistance lines or order blocks. It is the same exact thing. Okay, now let's say that you want to enter a short exactly right here. What I'm gonna do in this occasion, I am gonna be closing this buy over here, and this buy is gonna give me $388. You will see we will add everything in the end. This is green. So now this buy is gone, but we have this one, which is this minus 61 minus this distance running. For the moment I can delete the minus 61 because it represents the red area. So we know that we also will include the red area, so I will remove it just to simplify things. Now this is in a loss until here of $450 as an example. We leave this cell open. Now what we do, we are taking another cell over here with the premise that price is gonna be reacting here and it's gonna be retracing. If this happens, look what will happen now. Even if price comes only until here, let's say, we don't need to be greedy. What we can do, we can close this position, this cell over here, and we can close this one, this cell, with a smaller loss. So this will lose us only $283, and this will win 165 plus the 388 that we have won. Now things can go wrong again, of course, and we will see what we're going to be doing if things go wrong. For the moment, this is just a random example. There you go. This is absolutely beautiful. A random example. And as I said, I was willing to close the trade right here. Why? Because there is another fair value gap close to the base of this movement, which is this one right here. And probably price could retrace, from here, as it absolutely does, as you see. So you don't wanna be greedy. Don't say that I'm gonna go from here now and close this at break even, this position down here. It is fine because you have entered another position. Now, if this wouldn't have played out, then you should open two buys now, exactly right here. And of course, you wouldn't have a stop loss. You would just open two buys to compensate for this down here and of course for this. But of course, this didn't happen. You significantly increase your probabilities of being correct. So what happened nonetheless is we closed this loss. Instead of closing it at $450, we closed it exactly right here at minus 285. Okay, so dollars minus 285 we have here. And then what do we have? We have another plus of this one right here, plus 165. So now we're gonna do the addition. And we will say 388 plus 165 equals 553 minus 285. You have won a plus $268, guys. and you can attend your job, and you can do everything that you need to do in your daily routine, and you can still wait patiently, place an alert for price to go to another area, and then do what you have to do, as I showed you. Now, why didn't I sell from here? It is very simple why, because I didn't have enough space between both positions. One position was here, if you recall, and the other was down there. This means that I should have closed this one with only a $58 win, which you can do. You can absolutely do that, but I prefer to have some space between my orders. This would be also absolutely correct to do. You could have finished the job exactly over here, but I prefer to have some distance in order for price to have more accuracy that price is gonna do at least a small retracement. And there you go, this happened, and instead of taking a $60 loss from the initial buy that we had, if you recall, we had a buy here, we turned this loss into a $268 win. And the best part of that is that you didn't even need to be in front of your charts the whole time. This is the beauty of this strategy. Of course, this strategy will have losses, but if applied correctly, as I showed in the other video that I told you to go and click on ChrisFX, on the 15-minute time frame, I was just placing very tight, let's say, activations. So instead of leaving a little bit of space, I was placing the other position very close to those pin bars, which is not the way we are trading, by the way. I'm just saying what I did. I just wanted to show how hedging works also in the group. So what I did place the orders very close. I was activated to 3 hedges on GU and 3 hedges on Nasdaq. I wasn't able to get a retracement, a decent retracement. Nonetheless, I only closed with a $10,000 account with a loss of $100, and this took from Monday until Thursday. So all these days, and my only loss with a bunch of repositioning and a bunch of bad luck, this whole thing just removed 1% from my account. This is absolutely spectacular, guys. Hopefully you liked this video very much. Now, this is the way that I am gonna be trading on the copy trading. And I highly suggest that you go ahead and click on the links that I have down in the description, and you can just copy my trading. You don't need to be in front of your charts. If you have a daily job, I will apply this type of strategy. Actually, I will be applying my strategies, the ones that I teach, plus hedging, because hedging is not a strategy on its own, it's a risk management tactic, let's say, in order to maximize our returns. So you don't need to do anything, you just deposit an amount on a regulated broker where I also have my funds, and I go ahead and I trade my capital and your capital, and we split the profits. That's all you have to do. You don't even need to do all of that. Just enjoy your time and let me do the dirty job. Any other service, of course, that you need, I will be leaving the links down in the description. Subscribe to the SMC Trader for more free educational content. This is gonna do it for today, traders. The SMC Trader signing out.